And welcome back. Some interesting trends are occurring in our US housing market right now as the number of reduced price listings has more than doubled compared to 1 year ago. And on top of that, there's approximately 61% more houses for sale right now compared to the same time frame 1 year ago. So in today's video, I'm going to explain what's happening right now regarding home prices, housing inventory, price reductions, and of course, much more, so you guys can make a more informed decision about whether you should be buying or selling a home. And with that said, let's go ahead and dive right in. And of course, check out that link below if you guys want a real estate agent referral, whether you're looking to buy or sell a house in virtually any parts of the whole United States. And that link is homeandmoney.com/Jason. And click on that to get started today. So with that said, let's go ahead and dive into today's video here. And this again is based on my weekly update I make for you guys according to data from Realtor.com. But just like my previous videos, I did not read their analysis of their data. Instead, I like to share my own analysis of their data. So instead, go to realtor.com/research/data. Click on this link right here. It more or less takes you to this nerdy Excel spreadsheet that I kind of have analyzed here. So let's go ahead and get nerdy here. So for the week ended March 11th, let's talk about home prices first, by the way. So asking prices only increased by 6.3% compared to the same week in 2022. Asking prices increasing by 6.3%. And this, by the way, ties last week. Last week, it was also 6.3%. And at that time, that was the smallest increase of asking prices in the US going back to June 20th of 2020. Of course, right after the onset of COVID here. At 6.3%, the smallest increase of asking prices in the US going back to June of 2020. On top of that, asking prices in the US have now increased by single digits for the past 13 weeks in a row. Now, this is so much different compared to last year. Last year, the only weeks we saw single digit increases of asking prices were the last 3 weeks of 2022. Every other week in 2022, we saw double-digit increases. Now it's at single digits for the past 13 weeks in a row. Let's also have a look at housing inventory, or the number of houses for sale in the US. Because last week it increased by 61.4%. The interesting trend regarding this is that this is the first increase of housing inventory in the last 6 weeks. Now, we're not talking about giant increases though. It went from 61.1% increase, now it's 61.4%. So a very small increase by 0.3% compared to last year. But of course, something worth noting though, especially given the fact we've been seeing new listings decrease compared to last year for quite some time here. So inventory is up by 61.4%, which by the way, when looking at data from altosresearch.com, they are reporting gains of 69% of housing inventory compared to 1 year ago. Going from 245,000, now it's at 414,000. That's an increase of 69%. Also, as a note right here, besides a very small increase that we saw last week of housing inventory, according to data from Altos, inventory has been declining since November last year, despite increases on a year-over-year basis. Currently, inventory is at its lowest levels since around mid-June of 2022. Here's a better way to describe this. Look at this. Inventory has been more or less decreasing ever since November. It peaked at approximately 575,000 on November 5th. Now it's only 414,000. This is actually the lowest levels going back to approximately mid-June last year. But the current levels right now at 414,000 is much higher compared to a year ago at 245,000. Much higher is a gain of 69%. And also much higher compared to 2 years ago at 316,000. So at 414,000, this is much higher compared to the past couple of years. However, though, when looking at pre-COVID levels, we're at historically low levels. 414,000 right now. Pre-COVID, back in, I don't know, do you call this pre-COVID? March 20th? I don't know if you do or not. Anyways, March 20th, 2020, there was 737,000 houses for sale. And definitely pre-COVID, back in March of 2019, there was 829,907 active listings in the US. And back in 2018, at the end of March of 2018, there's approximately 805,000 houses for sale. Therefore, it's very important to note here that we have approximately 60% more houses for sale right now compared to 2022 at this time. But when comparing levels to March of 2019, we have approximately 50% fewer listings in the US right now. In any case, let's get back to this nerdy Excel spreadsheet here. So active listings again increased by about 61%. And this is despite the fact that new listings have been decreasing compared to last year for 36 consecutive weeks. So fewer new listings compared to last year for 36 consecutive weeks. And on top of that, new listings have been decreasing by double digits for 7 consecutive weeks. But wait, there's more. As a note right here, new listings have been decreasing by double digits for 31 at the past 33 weeks, decreasing by double digits in 31 at the last 33 weeks. So what's crazy about this is even though we have far fewer new listings this year compared to last year, inventory is still up by 61%. Which is telling me that this increase of housing supply is really due to a pullback in home buying demand, houses taking longer to sell, and we're seeing fewer contracts being signed between buyers and sellers. This increase of housing inventory up by 61% is not due to a giant increase of new listings. And speaking of houses taking longer to sell, houses have been taking longer to sell compared to last year for the past 32 consecutive weeks now. Again, though, this is based on closed home sales. Therefore, days in the market here, or this increase of days in the market, is a lagging indicator. Something else worth mentioning as well is that for the week ended February 18th, days in the market increased by 24 days. Houses taking longer to sell compared to the same week in 2022. By about 24 days, about 3 weeks compared to last year. And that 24-day increase was actually the biggest year-over-year increase on record for data that goes back to at least July of 2017, based on data from Realtor.com. The reason why I mention this is that this has been on a downward trend more or less ever since then. The week after that, an increase of 19 days from the 24 days. And then for the past 2 weeks, days on the market has increased by 18 days compared to the same week in 2022. So even though it's taken approximately 3 weeks longer to sell a home right now, it has been more or less on a downward trend for the past several weeks. I also want to give you guys an update regarding the number of reduced price listings as well as the share of price drops as well. So for the number of reduced price listings, last week that increased by 123.9%. This is actually the 5th consecutive week in which we have been seeing this percentage actually decrease, going from 170% for the week ended February 4th. Now it's down to 123.9%. Now, having said that, the number of reduced price listings has been increasing by triple digits for 17 out of the last 19 weeks. Let's also talk about the share of price drops according to altusresearch.com. For the week ended March 17th this year, the share of price drops is at 30%. So approximately 3 of every 10 houses for sale right now have reduced their asking prices. That's what the share of price drops means, 30%. So in mid-November last year, though, that was really the peak over the past 12 months. The percentage there was 43%. This equates to a 13 percentage point decrease over the last 4 months. And here's a chart showing just that. The share price drops on November 18th was approximately 43%. Now it's only 30%. The lowest levels going back to approximately July 1st last year. The share price drops the lowest levels since July 1st last year. Now, having said that, at 30% right now, this is much higher compared to 1 year ago at 17%, approximately 16% in 2021. And back in March 13th, 2020, the share of price drops was approximately 25%. And pre-COVID, back in 2019, it was 28%. And at the end of March of 2018, it was approximately 25.5%. So the share right now at approximately 30% during that same time frame is at least a 5-year high. So before I share a summary of today's video, along with kind of some predictions as well, I also want to share how this last week compares to years past, going back to 2018. So for asking prices, look at this giant increase last year. Last year, asking prices increased by 14%. Now this year, a gain of 6.3%. Obviously, over the past 3 years, a huge fallout in the number of houses for sale, and now a giant increase, a gain of 61%. Also, houses selling faster compared to the previous years for the past several years, whereas this year, the entirely opposite direction here, an increase of 18 days. So houses taking 18 days longer to sell, whereas for the week ended March 12th of 2022, houses were selling for about 14 days faster than that same time frame in 2021. And obviously a giant increase in the number of reduced price listings this year, whereas the past several years, huge decreases. All right, I know that was a lot to cover in today's video, so here's a summary for you guys. Number one, asking prices in the US only increased by 6.3% last week, matching last 2 weeks percentage as well. A gain of 6.3% for the past 2 weeks in a row. And last week was actually the smallest increase of asking prices going back to June 20th of 2020. Number two, last week, housing inventory increased year over year for the first time in 6 weeks. It also increased by 61%. However, inventory has been on a downward trend since November last year. We're currently at the lowest levels going back to June of 2022. Also, new listings have been decreasing by double digits for 31 out of the last 33 weeks. This continued lack of new listings is causing housing inventory to stay at historically low levels. Number three, mortgage rates in general had been on a downward trend this year until we hit February. Average 30-year fixed rates have risen 70 basis points or 0.7 percentage points, have risen by 70 basis points in the last 1.5 months, going from 6% to 6.7% at the time of this video, which is the 20th of March. And because rates have been rising much faster than prices decreasing, housing affordability is actually getting worse, despite the fact that the median sold price in the US is down compared to 12 months ago. Housing inventory getting worse due to this spike in rates ever since really February 1st this year. And number four, we saw a huge increase in the number of reduced price listings over the past 5 months and triple digit year-over-year gains in 17 out of the last 19 weeks. However, though, the share of price drops has been on a more or less downward trend ever since mid-November last year. This could be from inventory decreasing over the past several months. And number five, houses are taking longer to sell compared to the same week last year for 32 consecutive weeks. Again, though, this is a lagging indication of our US housing market. So what are some potential huge changes ahead, given the fact that rates have been at or above 6% ever since October 1st, and rates have increased approximately 70 basis points ever since February 1st this year. Number one, average rates are around 2.2 percentage points higher right now compared to 12 months ago, and this causes a 22% decrease in buyers' purchasing power. Number two, housing affordability is still an issue in the US. It was improving when prices and rates were going down, but they have increased over the past 1.5 months. I should say rates have increased over the past 1.5 months. So buyers looking to purchase a $450,000 home today, putting 5% down. Compare that to the beginning of February this year. You're going to pay approximately $200 more per month to buy that same $450,000 home today compared to February 1st this year. And number three, based on my own analysis of the National Association of Realtors data for January, which was posted about 3 weeks ago, home sales fell to the lowest levels since October of 2010, based on the seasonally adjusted annualized rate of home sales for January. which, by the way, I'll have the National Association of Realtors data for February in about 2 days because they post February's numbers on March 21st this year. Also, on a side note, as I mentioned right here, after the bank closures, investors have been flocking to the safety of Treasury bonds, causing yields to fall and also for mortgage rates to fall as well. That's, of course, due to the fallout of Silicon Valley Bank and Signature Bank as well. Average mortgage rates were over 7% to start the month, but now they're hovering around 6.7% as of March 20th this year. And number 4, to combat inflation, the Fed has been raising rates. Of course, they don't raise mortgage rates, they raise the federal funds rate, which of course is the rate that banks charge each other for overnight lending. Very short-term rates here, or short-term loans here. Anyways, to combat inflation, the Fed is raising rates, the federal funds rate. We're seeing inflation start to slow down, but not by very much. Inflation is remaining very much sticky. The street is expecting only a 25 basis points later this week. On Wednesday, the Fed announces their Fed decision to increase rates, and the street is forecasting for a 25 basis point rate hike by the Fed. In regards to mortgage rates, that's likely to stay elevated until inflation shows signs of slowing down further, and that of course could cause home buying demand to stay subdued. And number 5, we're starting to see some very, very early signs that home buying demand is once again increasing. As we saw by the Mortgage Bankers Association's report over the past 2 weeks, they reported an increase of applications for mortgage purchase applications here, or applications for home loans to buy houses, increase for the past 2 consecutive weeks. However, though, we're still down by about 38% compared to a year ago. Also, new home sales, which are defined by contracts being signed between buyers and home builders per the U.S. Census Bureau, have increased for the past 2 months in a row. That's for data for December as well as January. However, though, on the opposite end of the spectrum for existing houses, pending home sales based on data from Redfin have been down by double digits year over year every single week this year. And number 6, I appreciate you guys for supporting my YouTube channel. Of course, I appreciate you guys watching this video as well. Hope you guys have an awesome day and look forward to seeing you on the next video.